So far, we have focused primarily on the low float gapper strategy because it worked right away. It's been a strong performer, and there's just been lots to talk about. It's been great. However, it's taken a break. If you remember the mid cap momentum strategy that I was working on, I just been recording, entries. Basically, if something pops up on the screener that fits the criteria, I'm recording it. And what I was waiting on is to try and have some sort of market downturn where these stocks that are high flying start coming down. Because a big question for most traders and for me in this strategy is where do you take profits? And especially with this mid cap momentum strategy, like the point is to let it run. We want to get a multi-bagger winner here, to use an old school trading term. We want to get multiple R, like 5, 10 R at least. Um, so the question is, how do we stay in the trade? So this week I'm gonna go and we'll review some of those trades I've recorded and we'll see if we can find an answer, even a rough answer, some sort of guideline to that question. But real quick, we'll check in on the low float gapper strategy here. Okay, so I have started to trade real money with this, and we are up. We started, if you remember, we started with a $10,000 account. I transferred $10,000 into a real account. And we're up five. We're actually up about 600 bucks, but because we currently have a trade on that's down, it's showing we're up about 500 bucks. That's exactly what I expect in this kind of a market condition right here. Let's zoom out. You can see like we're chopping around sideways. I could probably move this line, I don't know, something like that. I mean, we've had a nice recovery and we're chopping around sideways, and surprise, surprise, the strategy is chopping around sideways and we're up slightly. Here's what's great about that low float gapper strategy. We're not down. When the market gets choppy like that, most strategies will start to lose money. Like I mentioned before, the 52-week breakout swing trading strategy that I'd worked on in the past, or the 50 SMA breakout swing trading strategy. Something similar to what we're trying to do with the mid cap momentum strategy. But what I found is it worked incredibly well in bull markets, and all the other markets, it lost money, and not like a little bit of money, a lot of money. So that's why this low float gapper strategy is so great, because when we have not so great broader market conditions, we're still up 600 bucks. That's amazing. That's awesome. So I started trading this strategy with a $200 risk. I've actually increased it today, put some trades on, or I guess set some trades up. I increased the risk to $300, and we're going to keep working our way back to that 5% risk over time, and also judging what the market conditions are like. Okay, so let's take a look at the mid cap momentum strategy here. So all I'm going to do is I'm going to go all the way back here and I'm going to start looking at the trades that did well and then trying to figure out a good place. Something that would have kept us in the trade is the way to say it, right? Is it the 9 SMA? Is it the 21 SMA? Is it a break of an uptrend on the SPY? Is it? Let's try and see if there's something that we can find here. And I'm going to go through this live with you so that you can try to figure out with me what you see. So the first ticker was AMBQ. So we got into AMBQ on May the 3rd. May the 3rd. So this would have been an incredible winner. May the 3rd. I probably set it up on a Sunday, is what happened. So May the 4th here. And if we had set our stop, probably, well, I recorded that. set our stop at 31.60, and we actually came, oh, we got stopped out on this, I think. We actually would have got stopped out. Oh, no, that's 37. I set it down here to 31. Okay, never mind. This would have been an incredible winner. And you can see here how, like I've said before, I don't want just even like a multiple R is great, like 5, 10 R is great. But when I start to like double and triple the amount of money that I put in extreme cases, you can 10x the money, not the risk, the money that you put into this trade. So if I had got in here as I recorded 37.70 and we are now trading at 85, so that's more than double the money that I put in. That's pretty good. Um, as far as a place to stop out, actually, I don't know that I would stop out of this. I would probably be setting a stop here somewhere around 75, 74, somewhere in there, and just continuing to leave it. This doesn't answer the question why I looked at it today, but I'd still be in this, to be honest. I'm okay with holding something like this for months if it's going to move the account in the way that this is. Let's check the next trade. So we would have got into this the same day, May the 3rd or May the 4th. And we probably would have got stopped out. Let's see where we set the stop on this. Set a stop loss at 520. If I had got in at 760, we would not have gotten stopped out. So this blue line here is the 21. I don't know if you can see it very well. It kind of fades in, but this blue line here is the 21-day moving average. Um, if we had got out of the 21-day moving average, then we probably would have booked a very small profit. And we did eventually go to 1240. So I'm not going to put too much weight on this. We're going to have to review quite a few of these to be able to see what's common, right? Because one or two names isn't going to tell us what happens most of the time. So give me some time here. I'm going to go through. I'll draw your attention to anything that actually looks really good. Okay, so actually the very next ticker here, GCTS, is showing us a little something. We got in right about here at $1.50 and we set our stop loss at $1.20. So we would not have stopped out, but we would have had to wait through some choppiness and some time here for this thing to actually run. So again, I'm looking for a moving average. That's just the simplest place to start to try and find a good place to take profits. 21 day, we're giving way too much back. But what I did is I went down to the 4 hour chart because it is a bit faster moving. So I went to a little lower time frame here. And I actually would have been happy with this. The 21 day, the price crossed over here 320. So if I got $1.50, that's just over 100% gain, just over doubling my money. That's pretty good. That's a good start, right? And keep in mind that we're going to keep working on this strategy over time. As we review more, we'll get more information. We'll find better places to take profits, better ways to trade this, right? But let's just start with the 21 period moving average on the 4 hour chart. And I'm going to check some more charts and see what else we can find. So the next one is MRAM. Again, around that beginning of May time, we got in around 18. Again, 21 would have gave back too much. The 21 day moving average would have given back too much. If we go here to the 4 hour, we're still giving back quite a bit, but we also still would have more than doubled our money. So again, this seems to be a good place to start to kind of trade this off the 4 hour. You can see here too on the last chart that it holds that 21 period moving average on the 4 hour chart reasonably well. Another thought that comes to my mind here is that when it gets extended past this 21 period moving average on the 4 hour chart, like considerably, it might be a thought to take half off, take half profits and see if it can run further and then take the rest when it breaks, down more. So that's another thought. I'm going to keep reviewing more trades here. Okay, so the next ticker was MXL. Uh, kind of the same story. We would have taken profits here at 90. We got in at 55. So we didn't double our money, but that's still a pretty significant game. Definitely multiple R on this. We did make it to double way over here. Just something to take note of. Let's see what the next ticker is. It is quick. We got into quick at 1290 over here, right in here somewhere. So this one probably would have been about a 50% gain on the money that I employed. Still multiple R. Very choppy, very choppy. Hard to stay in this trade. And I imagine a lot of these are going to be like that. I think it's common to have about a 25 or 30% win rate on a strategy similar to this. So, it's our next ticker. Hmm. So here is one that we probably would have, yeah, we would have got stopped out of this pretty early and it kept going. SEMO, we were in around 195. Yeah, so somewhere around here. Hmm, must have been back here. 195. So we would have got stopped out here at 250. That's not much of a gain, but then again, we might be able to cross-reference that with a higher price ticker. Are we not getting, like we did end up getting a pretty strong move, but we might not be getting, double and triple. We might want to be looking for tickers that are like 10, 20, $50. See what the next ticker is. So Wolf, we got into at 33. Yeah, we must have got in somewhere here. And we set our stop at 2450. Way down here, that's good. But we would have got stopped out almost instantly if we set it here and it kept running. Okay, so then, the next question is when do I just move my stop up? Because I need it, in a number of these tickers, we needed to give it time to run, right? So we probably need to give it 2, 3 weeks to run before we start moving stops up. If we got in somewhere here, yeah. Probably need, yeah, at least a week to run. So that's another rule, another criteria. I want to give it at least a week, maybe 2 weeks to run before I move my stop up to break even or up to this 21 SMA on the 4 hour. Because it would have been a shame to get stopped out here when we got into Wolf at 33 and it ended up going to like 80. Again, we easily could have doubled our money on this, but it's a shame to get stopped out here. This probably would have been more acceptable to get stopped out around 60 when we've entered at 33. Pretty close to doubling our money on this. So, all right, I'm just going to go through the rest here and I'll let you know what I find. Okay, so I think our initial thoughts here of using the 4 hour chart and the 21 period moving average to stay in the trade, it is a good starting point. But I wanted to draw attention to this space. This is not space X, right? This is Richard Branson's space stock where he wanted to do some space travel is what he is trying to do. Every once in a while, it's kind of a meme stock. It goes every once in a while. So I did trade this one at one point. We got in at 393 and it went all the way up to like almost $9. So we more than almost tripled our money for sure, 2.5 times. And then it came all the way back down. And I think I'd moved my stop up to break even by this time. And even the paper trading account, I didn't make anything on this. So we definitely need to set some sort of rule, some sort of criteria that when we get so far above this 21-day moving average, when something goes parabolic, as we say, probably need to try and take half off at some point. If I want to let the rest run, that's fine. But oftentimes this is what happens when something goes parabolic, it runs out of steam and it comes all the way back down. It took another stab at it, but it was weak. It couldn't re-break out. So I think that's kind of where I'm going to end it for today. This kind of review is edge building, right? This is where the edge is built. You record all the trades. That's just recording trades and getting familiar with, the price action, how things move. It's gaining experience. It's good. It's also important. But when you're talking about taking a strategy and actually building edge on it, it's these details. And like we don't want to feel overwhelmed with this, right? Just break it down. You're just going to record trades. Maybe set up some paper trades. That's just one thing. You're just going to do that every single day. You're going to hunt for trades and you're going to record them. Then, when it comes time to figuring out how to make the strategy better, you know, I don't know that you want to go through all of your trades and just have no plan, right? We're not looking, or we're looking for everything. Either no plan to look for something, or we're looking for everything, right? Just pick one thing. In this case, take profits. And take profits is a very important thing that most people don't know how to quantify. They don't know where, like, that's the most common question asked on social media almost is where do I take my profits, or complaining because they got stopped out, and then something went way higher, or next time they tried to hold and they got stopped out for a loss. And take profits is kind of a difficult thing if you're not doing some sort of formal, structured quantitative review. And now I know that's a lot of big words, but the reality is I'm just going back through the charts and trying to find some reason to stay in this trade. And obviously some reason to exit the trade. If you haven't read Mike Bellafiore's The Playbook, that's where I'm taking this from. Definitely read that book. It's very good on telling you how to structure your trades of when to get in and when to get out. So, if you're interested in learning this kind of a process, some sort of structure that can get you into a strategy, get you improving and developing that strategy and improving and developing yourself as a trader, something that will actually work to teach you how to trade, I'm definitely interested in moving the Edge Foundry forward and being able to show people how to do this in real time. So if you're interested, go to theedgefoundry.com. book a call with me, and let's see how we can take the next step. Give me a like, subscribe, and I'll see you on the next one.